Welcome to Trading Lounge and the US indices for the 10th of December. I'm going to start with Alphabet, Google here, and then we'll have a look at Apple as well. And the reason for that is because these particular structures that are moving to the upside here, that have taken out the previous high here, are quite impulsive. So that means impulse wave. So 1, 2, 3, 4, 5 is an impulse wave for wave 1, back for wave 2, and then 1 and 2 and 5 waves in here for 3. We'll look for the ABC for 4 here, and then up for wave 5. A little bit short, but 1 and 2 and 3 and 4 and 5 here for wave 3 here. It's made a high above here, and we're also looking for a classic trading levels pattern here where we have the arrival, the reaction, the first high above the level, and then the move down here, which we're seeing here at the moment for this wave 4 that can pull back to the wave 4 of 1 lesser degree, and then we can look to add to those positions once wave 4 is done. So this is an impulse wave to the upside. Yes, it could be counted in 3 waves as an A and a B and a C wave here for a B wave. So all of this here, down here would be the A wave here, up here for the B wave here, and down for the C wave here. So technically that's correct. And well, however, the A wave is simple. The B wave is really quite complex. In that regard, it's much bigger, and that's sort of okay too, because you know that with Elliott, with waves 2s and 4s, if wave 2 is simple, then wave 4 can be complex. That's the same with ABC corrections as well. If the A wave is simple, the B wave can be complex, and the C wave can be simple or even more complex, but you just get that alternating view there. But so I mean, I respect that, I appreciate that, but it does appear that this is impulsive, so we'll continue to follow this up to the upside. So also with Apple as well, we'd been looking for an A and a B and a C. Quite happy with that. We've got an impulse wave here, an A and a B and a C for wave 2 here. Then we're looking for 5 waves up here, and then we're looking for a corrective move back to the box here, the 50-60% retracement level. So that's on cue there as well. So what I'm trying to say is I'm just seeing this thing in the S&P 500 as a corrective move, and the same within the Nasdaq as well. Now, there'll be different ways to count the S&P and the Nasdaq, as there is different ways to count the stocks. So in this case with Apple here, we can see wave 1 and 2 and 1 and 2 here. So we could also view that too in the S&P. So from its wave 4, we could look at wave 1 and 2 here, then wave 1 and 2 in the S&P. So we can, and the NASI, so we can do that as well. So there's different counts, and we just got to filter our way through it. But overall, I feel that we are still in the bullish market, and we just got to figure out what the correction is. Okay, so let's start with the S&P 500. So with the S&P 500, as you may know, we've got wave 3 here, an A and a B and a C for wave 4 here. Now we've had this move up through here, which we're calling wave 1 and wave 2. There's also a case of looking at wave 1 and 2 over here, the count that we've been tracking on our website. So if you're a Trading Lounge member, you would know that particular count on the charts. And that's highly valid as well. So we need to accommodate both of those. Yeah, I mean, is it possible to also call wave 3 here an A, B, C here for wave 4, and then have wave 5, this orange wave 5, sitting where this is here? Yes, it's possible, because we've made a new high above wave 3 here. That said, we're expecting just trend lines are useful and useless, but you know, they play their part, and we could see that it's finally touching on that top there now. So it's reacting from that. The market is also within group 2 here. It looks like it sort of may hang in there, but if it drops out of the 65, the lower end of group 2 here, group 2 65, 72 and 80, if it drops out of that, then we'll see it move lower. So if this wave 2 is in play here, then we need to look at how far that could pull back, and that's where that is here for this. So I'll just make a note of that. So it's possible for it to pull back into that space there. I kind of don't think it is in a way, because then it would sort of destroy the Nasdaq count, completely, and it just doesn't seem right for it to, in terms of Elliott, to do that. So anyway, let's just drill in here and have a look at these scenarios in here. Well, first of all, let's go and have a look at where we were yesterday, okay, just on the hourly chart. So on the hourly chart, we were looking at this as a bullish move, as wave 1 over here and wave 2 here and wave 1 here and 2 here and 1 here and 2 here and 1 here and 2 here, and going up for wave 3. Now, the thing with this is that all the way along here, it wasn't behaving, it wasn't behaving like a third of the third of the third in terms of Elliott structures that would be really strong. So that was raising a flag, but we continued with it anyway because the Nasdaq was looking okay. But the Nasdaq is now corrected, so we're going to have to change this count into something a little bit more appropriate at this stage. We have been, while we're here, I'll just go to the 15-minute chart here, because that's where we've had our trades at this point. No, we didn't. I thought I had them. Oh, that's right. We'd stopped out before here, weren't we? But yeah, sorry about that. I lost the plot. Yeah, not to worry. But anyway, what we're talking about yesterday was just quite simply, we had the arrival here, the reaction here. We're looking for the first high above the level here, and then the correction here for this. So then we're going to go long over here, I think we had on the 15-minute chart. Once we develop support on the 3700, that's what we're sort of waiting for. So we're looking for this wave 4 to pull back, but it's overlapped this wave 1 here now. So I can't really use this count. So that's why we need to have a look at other counts. So first of all, we'll look at this bearish count here. So, well, it's not bearish, but from wave 4 here as wave 1, 2, 3, 4, and this is on our website here as 1 and 2 and 3 and 4 and 5 here. The problem with that is wave 4 here overlaps wave 1 here, but we can count 5 waves from this particular space in here, and then also 5 waves up here now. So it's kind of fitting in that regard. So we'll keep an eye on that. But we could also look at this differently as well. I just got to find out where I put that. Otherwise I'll have to draw, okay, here, this one here. So this is another way to view the count as well. So in this case, we've got wave 1 here and wave 2 here, then wave 1 and 2 here, and then counting this as 5 waves up through here. And that counts quite nicely as 5 waves in through here as well. And we can have a look at that on the tick chart. But the takeaway here for this is that if this is the case, then the market would pull back down to this little box in here. So basically taking from that low to that high here, looking at the 61.8%. So that means that we would come down and have a bounce off the 3650 here, the lower end of group 2, back up at that point, and then another drop down close to the 3600 area, and then move up from that point. So this is a valid count as well. So, but however, if this wave 1 is sitting up through here, then it's going to find the 36 here as the resistance here. So then if it does that, then you'll know that we're looking at wave 2 moving lower at that point. That would move back down here further for that. But if the 36 becomes the retested resistance, then we can look at that being the case down here for that. See, on the Nasdaq, if I can just bring that across while we're kind of in this 4-hour time frame here, with the Nasdaq bringing this across here, there's two ways to look at this here. So we can look at this as wave 1 here, very happy with that, and wave 2 here, and then wave 1 and wave 2 here, and then looking at all of this as the wave 3 here and then the wave 4 here. If this is going to be the wave 4 here, then the market really needs to hold out on that current low where it is at the moment, because it's the 38.2% retracement level coming in on that low there. If it breaches lower than that, I mean, wave 4s can come down to the 50%, we know that. But all in all, if this market does come down lower here, we get sort of 5 waves down here and then 3 waves back up. Well, then we'll look at this all being just wave 1 here at this case, and then pushing up from that point there. See, it's pretty hard to see it failing from this point and coming down here, because we'd be left with 3 waves here. So it just doesn't make sense in terms of Elliott, unless I've made a huge mistake. And if anybody can see that, well then please let me know. So these are the 2 counts we're tracking here for the Nasdaq. If I just go to the hourly chart here, this is what I was talking about before, because we'd been flicked out of the S&P, but not in the Nasdaq, but we have now in the Nasdaq. So we've had long trades all through here, and then we been triggered out on this low here for this. So so counting this up here from wave 2 here as wave 1 and 2 here, it makes kind of a nice wave 3 up here, I have to say. And then coming back for the wave 4 here, and that's currently the 38.2% retracement level there. Now we know wave 4s can get a bit trickier and things, so we may even come down a little bit lower here, just a bit, you know, having a bit of a dance across this level and back down through here, and then have an ABC back up here as such, and then come back down again still for the wave 4. If we come down lower into this space, then we'll know that we've got a wave 2 at that point. So in a nutshell, we are having a correction across the previous high here, trying to find support at that level, basically. I mean, it's not quite that level, but it's taking another high over here, but I've just left that trend line in, as I've left this trend line in through here as well. So that's what it's dancing with. We could straighten that trend line up as well through here, but you can do that. There's not much difference really from viewing that. So, but it's that high here. So the market's moved above it, and it's going to try and find it as support. Now, I think that it can have a little rally here and then come down lower for one more, and then have a move to the upside for that as a rally, and then either come back to where it's coming back to here and move off, or drop a bit lower at that point. So it's just something that we're going to have to see. Now, if this market is going to do that, well then the S&P is going to do the same, isn't it? So yeah, so I want to go back to the S&P, and I want to have a look at this little leg in here, so you've got a bit of an understanding of that. And to do that, I need to go to the tick chart, of course. I need to bring in more data. So as I've got the Nasdaq as wave 3 up here, or wave 1, I can do the same with the S&P 500 as well. But just wanted to tune into this here. So let me just tweak this up a little bit. Just so you've got some sort of understanding of this structure here for this. So starting at the top here, I can count 5 waves down for wave 1 and 2 here, and then from 2 all the way down to 3 here. But in 3 here we need 5 waves of one smaller degree, which would be 1 and 2 here, and then all the way down for 3 here, and 4 here, and down for wave 5 to make that wave 3 there. Now that wave 4 there could get a bit more complicated, but let's just check out where that is. Well, it's quite close to the 38.2%, isn't it? So it might do the trick, but just be mindful that it could be an A wave, a B wave, and a C wave coming up a little bit higher here. it does appear to be corrective. That is in 5 waves there, I can see, so it makes a nice ABC pattern there. So we should see this drift lower through here and drop out of group 2 here. But yeah, and from wave 3 here, we've got, in that space, we've got 1, 2, 3, 4, 1, 2, 3, 4, 5 for 1 and 2 here, and 3 and 4, and then 1, 2, 3, 4, 5 for the 5th or the 3rd and the 4th. So down for the 3rd and the 4th and the 5th here. Now, it appears that we're going to get 5 waves here, right? So if we get 5 waves there, that means that we're going to get, after 5 waves comes an ABC correction, and then another 5 waves down at that point. So we'll just put that into place here, get some understanding of that. So you can adjust this. So we'll take it from the top here, and we'll take it down. We'll just take it a little bit below the, maybe into the 5 there, yeah, somewhere there. So that would leave the, not that it has to pull all the way up to the 61.8% there, but we can just use that as a bit of a starting block there for that. So that's where the rally can come to. So that's important, because if you think there's a low in place and you start moving in long here, you need to know where the problem's going to be, and the problem's going to be at the 3688 area, but depending on where that low comes in at that point, of course. And because we've got 5 waves here, that means that after an ABC correction, we're going to get another 5 waves down. Now, this 5 waves down here, remember that this can also, I've got it as wave 3 up here and coming down for wave 4 here, but it also could be wave 2 coming into play as well here. So if it is wave 2, then it's going to come down lower than wave 4. Because we know wave 4 is currently at its 40%, but we can always gravitate to the closest largest number and see it play out here. So we'll need to see how that goes. If it's a wave 4, it doesn't have to have equality in this wave A here, and wave A and wave C don't have to have equality. Wave C can be 61.8% of the length of wave A, so we need to take that into consideration as well. But the takeaway here for the next session is that it appears that we're going to get 5 waves here, as 3, 4, and 5 here. So then that's going to create that ABC pattern, and then another 5 down after that. So coming back to, let's just go to the hourly chart here for a moment. So we'll just clean this up a little bit, because this is a change in course here now. Just looking at it in the bigger picture here. So we're looking for this to be 5 waves down here. There's obviously a trend line support there as well, so we can just put that in. That's helpful. That's why that's going to be a bit of a consolidation there, but it may spike lower, and then we'll be looking for a rally, and then we'll be looking for another 5 waves down here. Now it may come to here, or it may come down further at that point. It can also be, as I've just mentioned, it can be this one here, or it can be this wave 2 coming even lower in at that space. Okay, so that's, I mean, it's not a very good picture here, but it's, you can understand it at that point. So if we go back to the Nasdaq for a moment, then we can assume that the same thing's going to happen here as well. So we've got, this would be wave 1 and 2 and 3 down here. We're still looking for 4 and 5 in a bit of a nutshell. So that means that I can move that out of the way, put that over there. So it can be wave 3 up here and coming back for wave 4, or we need to look at it as wave 1 here and back for wave 2 in that space. Now, if it's wave 2 here, we're going to see this move down here, we're going to see it move back in probably around here somewhere, and then we're going to see this move down through here. So we'd still need to get confirmation at that particular point there. So based on that, I don't think that's going to go as high as I've got it there, so I'll just drop that down a bit. So that's where the bounce can come to at that point. So I've got that too high here for that. So these are the two scenarios that will be in for the S&P and for the Nasdaq, for both of those. And the thing is when I showed you Google's pulling back for a wave 4, a blue wave 4, and Apple is pulling back for a green wave 2. So any of these two patterns would suffice at that point. So we're just going to have to let them play out at this particular point. The only spanner in the works really is the much deeper correction that we've got, not on that one, but on the S&P here, on this chart. But for this one here, we would need to see the 36 here become the retested resistance. So can you short this market? Yeah, of course you could. So, but what you need to do is you'll need to wait for, you don't want to be shorting it right now because you're just going to get trapped. If you're short already and you've acted early, well then obviously that's fine, but otherwise you need to wait for the rally. So this moving down through to here and then coming back to that 50-60% mark, and then you can look to short and we can see how that brings us down. So yeah, depending on if we've got that wave 4 or that wave 2 sitting here, if the 36 is breached, then you know that we're coming much further down at that point. But it is hard for me to see that because it makes counting the Nasdaq really quite difficult in this point, at this point, counting all of this here. Now I can revert back to our triangle pattern that we had before, where we're looking at this here as an ABC for the A wave and an ABC for the B wave here, and then coming all the way down for a C wave over here. So that's also possible as well, but that would bring us back into wave 4 at that point. So yeah, I don't have enough evidence here to call a bigger move down just yet, you know. So I think we'll just stay with the corrective move here and we'll monitor it. So we'll need to see Thursday, Friday, and maybe even Monday to figure this out. But yeah, that's where we are. Alrighty, sorry for such a long video, but I need to look at all the elements and then explain it, and hopefully some of these ideas resonate with you, and you've got your own, or you can build on these and so on and so on. But I hope it's useful. Alrighty, cheers.